Okay, guys, so what if the low is in? What if I told you that the low might be in from now until the end of this month? Here's why, all right? So we have the Federal Reserve meeting at the end of July, okay? And the decision there is that it will likely be a 75 to 100 basis points increase in the rates, right? And interest rates because of the crazy inflation that we're facing through, right? We're going through right now. We have strong labor market, but we have high inflation. The Fed wants to contain it. So what if this is exactly what the market is looking for? What if the market is looking for a very, very aggressive Fed, knowing that it's going to fight inflation and try to price in a positive outlook for the remainder of the year come post Fed meeting? All right, so let's dive into the analysis because I want to show you guys the potential that that may be the case, the possibilities. All right, not going to say that today is the low because the markets or Elliott Wave, per Elliott Wave guidelines, we do not end cycles in 3 waves. We end them normally in 5 waves, where there is the fifth wave, the final fifth, or the C wave, right, of a correction. Now we know for a fact that this right here is not a trend change, right? It is likely that we may continue, right, just correcting before we see the next leg lower. That is more likely than not. Okay, that is more likely than not based on the market structure that is being developed. Now, why do I have the daily time frame? Because sometimes we just have to zoom out to give an understanding as to what we're trying to achieve, accomplish, and understand to give us to paint the roadmap for the possibility that to draw our possibilities, right? To draw our own conclusions and analysis to a potential bottom, in this case, that what we're looking for. So, all in all, we've been anticipating or considering rather, right, that beginning of this year was the top in the market, right, from the 2020 crash to 2022. So 2 years of rally, and now we're correcting it. That is normal market behavior, right? We see a rally, we correct it, and then we move up again, or vice versa. We see a rally lower, we correct, and then we continue. All right. Now, it's been challenging. I'm not gonna lie. It's been challenging to sort of clearly dissect this entire move, right? All of this. Some people are calling this as a corrective move. As a complex correction, where this is the Y, the X, the W. Sorry, the W, the X, and the Y. Some people are calling it ABC. Some people are calling this to be the A. We get a larger B, and then we get a larger C, which will mean that the markets have, the overall super cycle degree is complete. Now we're into a new bear market, a new regime, into the whatever you call it, whatever that is, right? But let's focus on what the ideas that we have at hand right now. So, look, I'm looking at this the following, right? We do have some sort of evidence that this from our January high towards this low, right? We have evidence of 5 waves, right? 1, 2, 3, 4, and 5, right? This is what we're looking at. So we have 1, 2, 3, 4, and 5. This is some sort of A wave, right? I'm gonna call it the A wave. We then retrace in 3 waves for a B wave. Okay. So as I mentioned to you guys, we have 5 waves down, 3 waves up. That's a change in trend. We hit a high, we hit resistance, and now we started rolling over. Okay, so that's in and of itself. This whole thing here, this price action is clear. I have no issue with that one. Now, where it becomes a little tricky is this. You guys already know that I've been looking for more downside, a little bit more aggressive towards the 350, a little bit 345ish, 349ish, but eventually the 350 and the SPY. But what if we just not gonna get there? What if we just truncate, right, at the end of this month and we head higher? So here's the final sort of idea, right? Get ready. So what if, because all in all, I've been looking at this as a wave one of a smaller degree that fits within the C wave of the higher parent degree. We pull back into the wave two, right? And now this is another 1, 2, 3, 4, 5, and to the wave C. What if that's the case, right? That's one way to look at it. But what if this is the actual case? What if this is the wave one, pull back into the wave 2, 3, triangle in 4, truncation in 5th? Now, why do I say that? Although if you were to ask me what probabilities am I weighing in on this count, I say a solid 50%, right? 50-50. And I'll tell you why. Because I am not a fan of this price action here. I'm not a fan of this being the wave 1, 2, 3. Well, I am the fan of this 1, 2, but I'm not a fan of this being, oh, sorry, excuse me. This is the 1, 2, 3. My bad, guys. 1, 2, the 3, right? This whole price action is a little bit skewed. It's not invalid. It's not incorrect, because you all have to understand that Elliott Wave, while some argue is subjective, it has guidelines. These are not rules. Rules are set, right? Guidelines is to guide you, right? To give you some sort of guidance in that manner, right? So we can use those guidelines, and it's not breaking any of them. All right, so 1, 2, 1, 2, 3, 4, and 5 to the third wave. And now if we start drawing, if we go down to the 4-hour time frame, right, we start wondering, what the hell is this price action? What is this? All right, this is not the end of a cycle and then we start an impulsive up, right? There's too much overlap going on over here, okay, for us to say that. So what if this is the third wave? Let me just hide this for a second. What if this is the, actually let's use this, right? What if this is the third of a smaller degree and we have a triangle in the fourth wave? So we have the A wave, the B wave, C, A, B, C, D, and whoa. A, B, C, D, and E, right? And then we roll over, and this is then the wave 4. Okay. Now, what do I say this, right? Because now if we want to get a little bit more technical, okay, let's expand this a little bit. All right, what if this is the wave 4, right? A, B, C, D, and E, and then we roll over. Now, let's look at our RSI, okay? In this case, guys, the RSI will likely start continuing higher, just ever so slightly, as price action moves sideways. And then when we get the next leg lower, we will likely get a price action, an RSI that will do something like this, rolls over and maintains a higher high, right? While price action maintains a new low, crossing the June 17th low that we have here. Okay, that'll be a clear divergence, right? We've seen this many other times in its price structure, in its price history, which I'm going to show you guys now. All right, because if that starts to happen, then there's one more element that we must see, and that is an increase in volume on the way down. And I'm going to show you guys in just a second, right? So let me take you guys back up to the daily time frame. Let's reset this chart, and let's take a look at our volume indicator, right? So if we are going to pinpoint, right, if we're going to pinpoint different lows, right, starting from 2016, what do we notice in volume, right? There was a low here, we see volume increase. There was a low here, we see crazy volume. Low here, volume increase. COVID lows, crazy volume increase. But we have not seen that yet, right? There's no increase in aggressive volume on our way down. Nothing yet. So we want to see, on top of seeing a truncation in the fifth wave, not a truncation, a fifth wave making a new low, RSI making a higher high, right? A higher low rather, and volume actually start peaking higher as we start selling, at least to an average of this zone, right, or this zone here. Then we could start considering that we may have hit a bottom. All right, but not until that occurs. So that's why I'm still on the fence about this count, but I'm not dismissing it, okay, because this is still a good possibility that this may happen. Now, to further sustain this argument, right, if we go down to, actually we zoom in over here, I'm going to shut off our volume indicator, right? We see that sorry guys, I thought I did something wrong here. We see that we are very near a, let me just delete this stuff so it's not too clustered. We already know that this is a wave forward that we're looking at, right? So we are near what appears to be a price zone of interest, right? We saw that back here on September 2020, this was a sideways consolidation before we actually start headed higher. That represents an overall 50% retracement from the cover lows to our recent high. All right. Or even the 618, which is not something I want to see, but we are now within the 38.2. Let's call it the 38.2 and the 50%. We will likely, we see that we touch the top end of this band, right, of this box here, which is the top here on September, or roughly touched it, and we're starting to attempt to bounce, but we're not going to go on higher. This does not look like it wants to. This looks like it may continue sideways before we start dropping a little longer, right, and touch the 50%, and then we're going to continue higher. Now, the idea, again, as I mentioned, is that we see price action, right, do that, then we go lower, we see RSI do that, then it holds support and the higher high, price action comes down somewhere here or within this bounds, right, between these two levels, and then we head higher. So these are all thoughts, right? These are all possibilities. Not to say that this is all set in stone, right? So just keep that in mind that we may be nearing a low. Okay, we may be nearing a low before you start getting way too aggressive with the bearish count. Now we saw the dollar today pulling back. I believe it was the case. Let's take a quick look. Actually, yeah, we sort of pulled back intraday, right? We touched the top end of our Elliott Wave trend channel and we pulled back. We still are displaying some type of divergence, although it may break it and we may continue higher and revisit this count, but hopefully we start pulling back in the dollar, right? We saw that oil dropped towards a low of 90. What was this? 90, right? I think we broke 80 at some point in our intraday. Now obviously this count is invalidated and we're no longer within a triangle, so what it's likely going to be is that this is an A, B, and we're going to go lower in the wave C. All right, so you guys already see that. You guys already see the idea, right? Now let's go back to the Qs, to the SPY, and let's actually now review our wave count, the one that we are tracking. So coming over here now, actually let me delete this real quick for us. Okay, so where is it? Here it is. Back down to the 1 hour time frame. So in this case, right, what we're looking for is that obviously this is the wave 1, ABC into the 2, 38.2% retracement, a 1-2, ABC 2, right? Now we have, if we go down to the 15-minute time frame, we have what it looks like to be a 1, right? Let me zoom in here real quick for us. So we have what appears to be a wave 1. Let me just delete this here. So wave 1 completed. Okay, wave 1 completes. Pull back into 2, 3, 4, and 5. Okay, we have evidence of 3 waves. Now, what I'm liking about this, what I am really liking about this, is that we are sustaining above the previous wave 1. So in this case, is this, right? This is the wave 1. Pull back into 2, 3, 4, and 5. Okay, as long as we remain north of this line, if price action does not breach this zone, we are still considering that this could be a potential smaller impulsive structure to the upside that will cascade into more into a higher degree impulsive structure, but I don't think that might be the case, but we'll see tomorrow. That's, you never know, this may be something, I don't know. So if this is the wave 2, right, 3 waves up to the A, maybe a B, maybe another C, maybe we prolong this wave 2, that will not be good, because then at that point we are going to be a bit, this is the 1, 2, 1, actually yeah, so this may be the A, B, and C. We may get another leg lower and then the C wave up, right? This may be the A, B, and C, and then we head lower. Okay, that might be the case. So all in all, you guys already see the idea, right? All in all, you guys already understand what I'm looking for, and I want to be able to, I'm gonna wait a little longer, right? Although I took a trade today, I took a short position in the Qs. I want to see price action head lower, but follow the alternate count that I just showed you, the one that I shared with you guys first, because that will be the most optimistic of them all that I have. All right, and that's what I wanted to share with you guys today. So the triple Qs, okay, the triple Qs are in the same scenario. If I just may do this here, just hide this, guys, or delete them. So this looks a little bit more skewed, right? We're looking for this to be the wave 1, ABC to 2, and then the start and the makings of the wave 3. Now, again, confirmation comes in at break south of 269. All right, 269, we break south of that, we confirm a new low, we continue on lower. All right, guys, so I think that was a lot of information for today. I don't want to bore you guys anymore, so the video has gone long enough, I believe. We're into, what is it? How do I know this time here? Okay, just about 16 minutes over into this video. So I hope you guys stood to the end, because this is a lot of information to digest and to consider. All right, guys? So thank you so much for tuning in. I'll see you guys tomorrow.